Excel accounting practice problem: populate an invoice using a billable item that was created from a purchase order or PO, or in other words, imagining a situation where we had a customer requesting a specific guitar, specific unit of inventory, which we then purchased or requested to purchase with a purchase order, then created a bill that we can imagine populating from the information from the purchase order, now turning around and invoicing the customer who made the original request for that particular piece of inventory. Get ready, because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it if you have access to it. There's two tabs on down below, an example tab and a practice tab. Practice tab starting out where we left off last time. Example tab in essence being an answer key. Let's take a look at it now. So now we're going to be entering transactions related to an invoice. As we think about the invoice transaction, we want to think about how we can link the whole process up from the purchasing with the purchase order, or the request for a purchase with the purchase order, all the way to the invoicing process. The scenario we are imagining is a customer coming in asking for a particular piece of inventory. In our case, a Squire guitar from a new vendor. We haven't worked with them before. We don't have the inventory on hand, but we say we will request it for you, and therefore we go to a purchase order for our new vendor, which is going to be Fender. All the while, as we go through the process, marking on the purchase order that this purchase was specifically made for a request that we're going to turn around and invoice a client for once the inventory has been received. Purchase order doesn't actually record a financial transactions, but it's going to be a request for inventory. Once we receive the inventory, we can imagine then populating the bill with the information from the purchase order, tying them out, having an internal control to make sure that we received what it is we ordered. We can also track the fact that we have the customer that made the specific order, which isn't relevant with regards to the vendor or the purchasing process itself in terms of recording it, but is important so that we can make sure that we turn around now and invoice the client for that piece of inventory that we purchased specifically for them, which is what we're going to do now, which we can imagine in accounting systems or software, that we populate the invoice from the bill that we created, that was created from the purchase order, tracking the fact that we had a particular customer requesting it the whole while. Here, of course, we're just going to record the transaction related to the invoice that we would create, looking like this transaction, tracking the inventory on a perpetual basis as we do so. So let's go to the practice tab and take a look at it. We're going to do some cleanup work here, hiding some cells to start off with, hiding column A to E, selecting those columns, right-clicking on them and hiding them. We're going to go ahead and hide them. And then we're going to basically copy our ending balances and make them our beginning balances. So we're going to copy the ending balances on the right-hand side, Control C, put them up front in our beginning trial balances, pasting them specially with the 1, 2, 3. And then I'm going to delete the information in the middle in the entries column so we can focus in just on what we are working with. Then the general ledger having the detail for us for the detail of the current month. This is going to happen on 2/24. We're going to have our standard invoice type of journal entry, which instead of debiting the undeposited funds, as we saw in a few presentations ago with the sales receipt type of form, we are going to be debiting accounts receivable, the rest of it looking similar to the sales receipt, which would then be equal to the sales tax. So we got to pay the sales tax to whoever is forcing us to pay the sales tax, collecting it, usually some kind of government in the United States, state and local governments. And then we've got the sales on down below, So that's going to be our revenue account. And then we're also going to be tracking the cost of the goods that are sold and the inventory on a perpetual inventory basis. There's our general journal entry. Let's go ahead and make some indentations with these two because they're going to be credits, alignment and indent. And the inventory also going to be a credit, so we will indent it as well. Now we're going to be looking at our subledger to determine the thing that we're going to be selling. To do that, let's go all the way to the right, noting that in accounting software, this would be driven by what is often called items and like a QuickBooks type of software, so it would know and be able to track the inventory item as we just populate the inventory item. This is going to be the new item that we set up, which was a Squire, so that's all the way to the right on the inventory, and down here, it's an SQ, we called it, which is a Squire guitar, we're going to say, on the SQ column in cell DW30, and this happened on 224. So on 224, we're now going to be, notice we increased it because we purchased these 20 units specifically for a particular customer, which we're now going to be turning around and invoicing 20 units at the cost of 168. 20 times 168 is the 3,360, pulling that to the outer column for the inventory. That means inventory is going to go back on down to 0 because we had 20 units that we purchased specifically for this customer that we're now selling at 168, bringing the balance down to 0 on the balance. That puts us out of balance up top on the general ledger compared to the subledger, or the trial balance compared to the subledger, same thing. So we're going to go all the way to the left and record this now. So we're going to go all the way back to the left. We're going to start in the cost of goods sold because that's going to be pulled directly from our subledger, equals all the way back to the right to pick it up from the subledge. Subledge is going to be way over to the right, scrolling down. We're picking up that 3360, 3360. There's our debit. The inventory is going to be the credit. Then we need the sales line, remembering that the sales doesn't need to be completely tied out, but the item, once again, in software would typically tell us or tell the system as we create the invoice what the sales line would be. We're going to assume here that I'm going to say negative brackets, that it was 244 that we sell these things for, times 20 of them. So that's going to give us then the 4880. We got to pay the sales tax to whoever's telling us we need to pay them sales tax. If you want to stay in business, you got to pay for protection. So we pay the state and the government and the city the 5% for our practice problem, 244, the negative sum. We got the 5124 here, so that looks good. Let's go ahead and post it out then. We got the accounts receivable up top, posting that out. So we're going to go to the AR, and this is going to be equal to the 5124. That increases both the year to date and the month. And then we're going to go to the sales tax payable on the liability side of things. So we're down here in N16 equals. We're going to be picking up the 244. That increases both sides, year to date and the month, given the fact that we're talking about balance sheet accounts here. Then we got the sales revenue account. Sales in the revenue side of things in N19 is going to be equal to that 4880. That increases both sides, but we have a different end result because we started at, for the month, 4,294, increases by 4880 to the 9174. For the year to date 2 months, we had the 51170 increased by the 4880 to the 5650. Down below, we had net income on the month of the 516 increased by the 4880 to the 5396. On the year to date, we had the 7943 net income increased by the 4880 to the 12823. Let's then record the cost of the goods that are sold, which is going to be right here. That's the cost of the goods that we're selling. And so that's going to decrease the net income and increase the cost of goods sold, decrease the net income. So on the month, we had the 3432 increased by the 3360, giving us to the 6793. On the year to date, 40,674 increased by the 3360 to the 44034. Net income then was at the 516. Now we have the net increase, sales minus cost of goods sold, 1520 to the 2036. Year to date, 7943 increased by the 1520 up to 9463. Let's now record the inventory, the last thing that we need to do, at least on the trial balance, before we record it to the GL and the subledge for the accounts receivable. Inventory going down, so we have a decrease in the inventory on both sides, same thing, because we're talking balance sheet accounts here. Let's post it out to the GL now. So we got the accounts receivable. Let's make this green so we can focus our eyeballs on it, on the thing we're doing more easily. That's the third account on the trial balance, so it's going to be the third account on the GL as well. So we're on Z5. Z5 is 25. Z5 is 224. Where did I get 25? I don't know. 224, this is going to be equal to left to the wall, picking up that 5124, which we're also going to have to add to the subledger, but let's not do that quite yet. Right now we're at the 19811. That matches the trial balance, and of course we're out of balance up top by that amount until we record the rest of it. We got the sales tax payable. That's the last liability account, so we're going to go assets and then liabilities. Last liability is the sales tax payable. Sales tax payable 224. We're in cell AU 19 at AU. We're at AU. Okay, AU 19 equals left to the wall. We're gonna go up to then the what was now I lost sales tax. That's what we're doing. It's green. See how the green saved me right there? So I know where I'm at. So we got the 2559 and the 244 brings us up to the 2803. That 2803 should match out what's on the trusty TB. 2803 on the TB. And so now we're going to record the last component of that first one, the sales. That of course is our first income statement account. Same on the on the GL, assets, liabilities, equity, income. On 224, we're in BB. Now we're on BC. Equals the left to the wall. We're in BC, back, way back to BC. So now we're on 51170, 4880 to 5650. That 5650 should also be on the trustee trial balance for the year-to-date number. The year-to-date number. The activity, the 9174, if we summed up the activity, we would see that number. Just to check that out over here, just so you can see the activity. Does that tie out here? It ties out to these three. That's the 9174. So let's scroll on over and let's do this one more time. This time, let's first ungreenify over here. I'm going to ungreenify these, and we're working on the last one now, the last one. So we got cost of goods sold. So that's going to be all the way to the right for the cost of the goods that are sold, which is going to be here in BF7. And so this is on, what did we say, 224. 224, we're on BG7 equals left to the wall. Left to the wall, we're looking 3360. So we increased from 4067 by 3360 to the 4434. That 4434 should be on the year-to-date numbers because it's an income statement account. Year-to-date numbers 4434. The sum of them should be the 6392, the February numbers, just for the current activity. So that would be these three. That's going to be the 6792. Okay, so that now we have everything there. We're back in balance on the general. Well, not back in balance. We got to record the inventory. Lastly, on the GL at least, inventory. That's going to be our fourth account. So it's our fourth account of the trial balance and the GL. It's the one hidden down here. It's hidden at the bottom. It's in Z28. We're going to be looking 124. We're in AA28 equals left to the wall, picking up the inventory at the 3360. So there's this 9626 down by the 3360 to the 6266. That should match what's on the trial balance at the 6266. We should be back in balance now up top. Now let's check our inventory account just to double check our subledger 6266, and we have to post to the accounts receivable subledger for the customer that we are selling this item to, so we can track on who owes us the money as well. So let's go all the way to the right. All the way to the right. Subledger should be back in balance over here in the inventory. So it's back in balance 62606, green 0. So we look like we're back in balance again. Back in balance again. And then on 224, we're going to say we had a new customer down here. I'm going to add them in CD14. We're going to call them new music stuff. That's what they call themselves, apparently. 224, and this is going to be equal to, in CE17, left to the wall, up to the accounts receivable, 5124. So there we have that. And then if I add up my customers, the 4 customers that owe us money are 6 now. That adds up to the 19,811. That should tie out to the trial balance given by the green 0. Let's double check. 19,811. 19,811 on the trustee trial balance. It is indeed that number. So this is where we stand as of this point in time.